Confused between large cap, mid cap, and small cap funds? Why not get a mix of all three? That's exactly what a multi-cap fund like TRUSTMF multi-cap fund promises. One fund, three segments. But is this mix right for you? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand what is a multi-cap fund. So, a multi-cap fund is a diversified mutual fund that can invest across market capitalization, and it must be invested in small cap, mid cap, and large cap stock. 25% of the capital invested is in each cap stock. The remaining 25% will be in the fund manager's command according to SEBI guidelines. And now let us understand a few basic details about this NFO. As this is an NFO, the opening date is 30th June 2025 and 14th July 2025. And some of the key features of the NFO are: this is an open-ended fund type with the category belonging to equity of multicap, and it follows the benchmark index of Nifty 500 multicap 50:25:25 TRI. And there is an exit load of 1% for redeeming within 180 days, but there is no entry load. And the minimum investment required to invest in this fund is 1000 rupees. And the fund managers for this fund are Mr. Mihir Vora and Mr. Akash Mangani. According to the riskometer, the very high risk is involved in this fund, and the primary investment objective of this fund is that it seeks to achieve long-term capital appreciation by predominantly investing in equity and equity-related instruments of large, mid, and small cap companies. Now, as we have a basic understanding of this NFO, let us move on to the analysis part, where we are going to analyze the pros and cons of investing in the TRUSTMF multi-cap fund. So let's start with the pros, the advantages. Number one, diversification across market caps. The fund invests in large, mid, and small cap companies, giving you a portfolio healthy mix. Number two, balanced risk and return. Large caps bring stability, while mid and small caps offer higher growth potential, which is ideal for long-term goals. Number three, SEBI mandated structure. It's not just a marketing promise. SEBI mandates at least 25% in each market cap, ensuring balanced allocation. Number four, is this suitable for core equity allocation. So if you want just one equity fund that covers all bases, a multi-cap like this can act as your core investment. So these are some of the advantages of investing in this fund. Now let us take a look at the disadvantages. Number one, limited flexibility for fund manager. Because of the 25% rule for each cap size, the fund manager can't reduce exposure to small or mid caps even during tough times. Number two, higher volatility from small cap exposure. That mandatory 25% in small caps means the fund can be more volatile than a pure large cap fund. Number three, not ideal for short-term goals. Being an equity fund with small cap exposure, it is more suitable for long-term investors, not for those seeking quick returns. Number four, this is a relatively new AMC and fund. So TRUSTMF is still building its track record. Investors may prefer waiting to see consistent performance before investing big. So what is the final takeaway from analyzing this fund? TRUSTMF is a multi-cap fund which aims to give you the best of all worlds: stability, growth, and diversification. But like any equity fund, it is meant for long-term investors who can handle a bit of volatility. And if you're looking for a core equity fund and want exposure across market caps in one place, this might be worth considering. But our personal recommendation is this is an NFO. We need to keep it in mind. So as an NFO, it's better to wait than to jump in right now. As always, before investing, make sure it fits your risk profile and financial goals, and when in doubt, you can talk to a professional like a certified financial planner. So our personal recommendation is, if you do want to invest in a multi-cap fund, there are existing mutual funds that have track records for a minimum of 7 to 10 years, which you can invest in after analyzing the highs and lows, because you're taking a calculated risk here. But here, investing without proper portfolio research will be, the investment is risky, because this is an NFO and we will be taking a blind risk. So this is meant to be a supplement complementary holding. So if you do want to invest in it because you just want to see how this fund performs from the beginning, then you can invest it if you do have some surplus money through your satellite portfolio with the minimum investment amount as a trial basis. Then over the years, if you think this fund is performing well, you can increase the amount according to that. And also, if you do need guidance, it is better to consult with a professional like a certified financial planner who will look into the fund suitability of investment objective, risk profile, overlap ratio, allocation, and see whether it aligns with your goals, risk tolerance, and especially your investment portfolio. So this will definitely help you in the long term period.
You can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.